The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, everybody have a happy holiday. This will be my last show until Monday. We have a travel dates coming up here for a bit, and hopefully we'll be around on Monday and finish the show. The first chart we're going to show in here today is the chart of the British pound versus the U.S. dollar. That's the graph in blue. And the white line is the consensus of bearishness or bullishness. As you can see, it's tremendously bearish. Folks, this is exactly what was happening with the crude oil when it was $26 a barrel. The whole world was bearish crude oil, and what did it do? It rallied $13.80 per barrel right off of that bottom. So these markets can get tremendously overbought and tremendously oversold. So just remember that the consensus sometimes can work in your favor. That's why we like the patterns, because the patterns are the sum total of the buyers or sellers. And when you have the market that can't go down on bad news, folks, it only has one way to go, and that's to bob up to the top. That's the main thing that you want to keep an eye on. Okay, we have a situation now that we've been watching very, very closely, especially Jim Twentyman and myself, and that is in the gold market. The last time we were on the air just a day or so ago, I believe it was yesterday. If you add one day to that, you get the 23rd, and we're going to pull up the gold chart showing you what we were looking for to see that the gold would, and we had a price objective down around the 1231 level. That was just the ABCD, but the strength of the down move would suggest that the CD leg would be greater than the AB leg. That would take us to 1212. And I believe we hit 1220 just a little while ago. So we want to think of what's going to happen to gold here. Should have some pretty good support between 1219 and also 1212. But the really incredible support is down around 1190. And believe me, I certainly don't want to have that happen because I would prefer to see that the market is going to rally here and give us a chance to buy at 1190, hopefully in about, if we were any luck at all, if we could get it down there at that level around the, excuse me one second here, the number on the gold we're looking at today is 1212 or $8 away, so we're not going to be doing too much. I'm buying it at 1212, and we're going to see how. You don't have to risk very much there, folks. This is not one we have to risk $8 or $9, because if it doesn't stop at 1212, there's not going to be any saviors in that market for sure. Now, the next question is the silver. Silver so far has broken down below the 1530 level, but so far it's held the 1520. I wouldn't be surprised to take out that support, but there is some, pretty good support around 1510 to 1520 in the silver, and as I mentioned, 12 in the gold market. The other reason 1212 is pretty important is because we had a high up there at 86. 1286, and if you subtract your $70 from that, which is the 2 times the harmonic in gold, that takes you right down to that 1212 level. That equals the big rally, or the big sell-off that we had after gold hit 1258 the first time. 1268. We went from 1268, we dropped down to we dropped down to 1190. And then we had the rally up into new highs, And so we're just setting up. Jim Twentyman and I did a whole lot of work here yesterday and today. I mean, there's a big time difference between here and California, about 15 hours. But I had an idea, and of course, anytime I think I have something, I always run it past the wizard because he has a meticulous way of tearing things apart, and that's what you really need to do. This time, he was starting to see some of the things that were unfolding in the gold market. So we got to watch this very, very closely because we have a chance in gold here for a major bull market. And I've been bearish, for a couple of weeks in here since that high was made up around that 1286 level, which was nothing more than the 61% retracement of the high, from way back in 2014. And that was a big thing too, because if you take a look at ABX, which is one of the bigger, in fact, it's the largest U.S. Gold producer. Just give me a second to get this up, and you'll take a look at it. This is the weekly chart that we're going to be watching here for American Barrick, and you'll notice that it hit the exact 61% retracement of the high from 2014 to the exact penny. The high was 1552, and the 61% retracement on it was 1552. So they don't always hit it exact, but sometimes they do. You have to pay attention to it. But the fact that we had this much thrust from September into February means that there's a potential here on the pullback, to really be taking a look at some of these markets in the gold. And we did the whole study with the gold miners. We looked at the gold spot. We looked at the futures, long-term, short-term, and cycle-based. And gosh, when you see what's happened to gold on a cyclical basis since 2002, when we made our bottom at 256 per ounce, this is really interesting here at 1190 in the gold. So what the strategy would be is we should get a bounce from this level somewhere between this 1219 and 1212 level. Below 1212, sets up the 1190, but 1190 shouldn't come in this early in the game, because if it comes this early in the game, it tells you that the scenario of what's happened in the past is different than what's happening now, and that is not a bullish factor. So we really need gold to hold in here, have a really nice rally, maybe back to 1260, and then one more move down to the downside. And if we get to that 1190 soon, we'll see if that's going to be the case. I think it's very, very important. To give you an example of what, this is the type of thing that we're looking at here. I'm going to switch over to crude oil here for just a little bit, and we'll get to the stock market in just a second, but I wanted to try to go through some of these patterns. You'll notice this three drive to a bottom pattern that we had in crude oil when it was $26 a barrel. We had a really nice rally of about $14 a barrel, and now we're in a corrective mode. So we want to keep an eye on that. 877-927-6648. Bill Koval coming up soon.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted into Tiger TV that 212 target, that 1212 target that we're watching in the gold. Just keep your fingers crossed, because if we could hold that level and have a good rally here for 3 or 4 days, and then early in sometime in April, somewhere between the 8th and 15th, we could get a move down to 1190. That's the back up to truck, open the door, and let the floodgates roll. So we'll see what happens. The next chart we're going to put here is the chart of the E-mini S&P. It's a 4-hour chart. Since the bottom, the double bottom that we made down there at the 1804 level, we now rallied 250 points off the bottom. We are at a lunar eclipse and a full moon. This is about as good as it gets for us cycle-wise. We've got all the patterns completed. The prices are certainly completed, as you can see, by the ABCD swings that we have in the market. And we also have Mercury changing signs. And in addition to that, we have the spring equinox. So there's just all kinds of cycle stuff just overhanging the market. And whether that's going to push stocks down or not, remains to be seen. We have not violated any of the numbers that we look at on the Fibonacci sequence, except for the NASDAQ on the close yesterday broke above the 61% retracement. It's trading below it right now, and that could have been just from a few stocks. That NASDAQ 100 is heavily biased by about 20 stocks, out of the thousands that are in the NASDAQ. It's really, they're cap weighted, and, that really makes a big difference with some of these. So we will watch it very, very closely. But we're all ready, to head down. But whether we're going to or not, again, remains to be seen. We'll just let the chips fall where they may, as they say in the trade, and then we will take a quick look at it. Now, we've had a request to talk about one of our favorite stocks, and one of our favorite people, Priceline Charlie out of La Paz, Mexico. And we're going to be looking here at the Priceline chart. And as you can see, just 3 days ago, we hit an exact 786 retracement in Priceline. If you'll look at it closely over the last couple of weeks, after that huge gap that we had, we made a ABCD three drive to a top pattern that came in spot on at $1,362 per share. We're now trading $50 or more under that. But the important thing is that this is a really classical head and shoulders pattern. And it has some bearishness because the right shoulder, where we are currently, is below the left shoulder. So we have some symmetry. We have some really good price projections on this after hitting the 786 retracement. So that's one of the stocks that looks like it's ready to roll over in a big way. Okay, we had one other question. We're going to have Bill Koval of WDK Analytics on just a little bit here, but we've had a request about the junk bond market, mainly because we watch a lot of Treasury notes and Treasury bonds. We don't do junk bonds very often, but this chart has a little bit of an interest because of the ABCD swings that we've had that started down. Actually, the junk bond market topped the same day as the stock market did on May 19th when we had Mercury retrograde and a new moon. We don't have that right now. We have a lunar eclipse, and we also have a full moon, which is different. This eclipse is very important because this separates the long days from the short days. In other words, starting now, days get longer and longer until we get to the solstice, the summer solstice in July, and then they start to get shorter and shorter. This goes way back, folks, to the Sumerians and Babylonians, and this is the kind of work that we did. Hello. That Pythagoras did back in 600 BC. But if you look at this junk bond, you'll notice that the last rally high from the October level, which was a huge ABCD, stopped exactly up here at the 34.80 per share level. And that's been a really strong rally. It equals the same rally that we had back between November and February of 2015 or 2014 and 15. So this is the situation in the junk bonds. This market should start another leg down, and relatively soon, if it is in fact is going to be a down move, and it certainly looks like it is. The trend is certainly down. There's no question of what we're watching when we look at this. It is really a down market. That's the bottom line of what we're trying to do when we watch some of these things. Okay, now one other question that someone has asked, and that's about the British pound. We talked a little bit about it when we opened the show to show you that everybody is incredibly bearish the British pound. It's pretty much, when you listen to the news, it's a foregone conclusion that Britain is going to exit the Eurozone. I frankly don't think so, because there's just too much at stake, and Germany carries a big stick over there. And that's just, hey, this is my opinion. And, it's like armpits. Everybody has one, and it usually smells. So the pound versus U.S. dollar on a monthly chart, you'll notice we've had tremendous swings from basically $1.08, all the way up to, $2.15, and now we're trading about 60% below that level. We're almost at the same level we were, back in the crisis of 2008. But the overall consensus is saying that the pound is going to break to new low grounds. But we have already broken below the 139 level. It's pretty much been discounted, and right now we're trading 200 pips above it. So that news could have already been discounted. You want to pay close attention to that, because it's important that we actually watch what's happening to these things. One other question that someone's asked, and that's about the euro. They're talking about the demise of the dollar and all of those things, and the euro is just having its normal corrective phases right here between 111.65 and 111.45 are a big cluster of Fibonacci numbers coming in off the last several days ranges. We look at that on a 4-hour chart, and that gives us enough data going back well over a month to tell us where some of this support and resistance comes in, and it comes in between 1170 and 11.45, and right now we're trading at 11.68 and change, 111.68 and change. So we're in that zone of where things should start to hold here in the euro. That's the bottom line. I had a terrific picture to show you today, folks, but it didn't turn out right. I don't know why. We were in the supermarket this morning here in Hong Kong, and they had durian, which is the king of the fruit. It's very expensive, and it's so bad. People love it, but it smells so bad. The back end of a baby's diaper is better than durian, but they love it, and that's just the way it is. And I'm getting a lot of flack from home on that. Anyway, 877-927-6648. Stay tuned for Bill Koval.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we're having some problems, technical, as you usually expect when you have Billy Ray Valentine on the line. I have more trouble with computers than any human being on the face of this planet, Venus, Mercury, and anybody else that has stuff on it. But we do have Bill on the line now. Mr. Koval, are you there?
Yes, Larry. Good morning.
Good morning to you. Well, I'm here in Hong Kong, China, and you're there in sunny Scottsdale. It's raining and foggy here, but we've put your first chart up. You want to go ahead and explain to us what you're looking at and what your view of the market is?
Sure. Just an overview, Larry. We're going to get more granular as we go along here. We've got.
Oh, wait a minute. You're using too big of words. Granular. You got to tell me what that means.
Well, we're going to get down to some specifics here in a second, but
Okay.
looking at the long view on this first chart, we can see that price is pretty elevated when you go back for 10 years or more on this bond chart. The other interesting thing I want to point out about it is that with the Bollinger Band thrown up on this chart, you can identify pretty clearly where the overbought and oversold areas are. And that's one interesting thing that I realized about your Gartley patterns when I first saw them years ago, is that they actually help identify the edges in the market. So in chart number 2, which I've sent you, you can get an added feel for that because overlaid on top of the Bollinger Bands is a linear regression channel. And that's another way to identify those edges in the market.
Bill, I remember the last time you were on, I think it was back around February 10th, you had a screaming buy signal. And that certainly turned out to be a really good one. I remember you really put your feathers in your cap and said either it stops here or, there's really big problems. And that was within about 12 hours of when the actual, market made a bottom. So that was a very good call. Now, we've taken a look. Now, we're ready for chart number 3, I believe. Is that correct?
Yes,
Okay, let's put that up. And I'd like you to be, you talked a little bit about linear regression. I did some of that work with the cycle work from Jim Hurst many, many years ago. But how do you use that as far as a timing tool, or is it just more of a price projection tool?
I don't use it so much for timing. However, I do use it for an outer band, if you will, among many that I use to identify where the extremes are. And here on chart number 3, we're back to just showing the Bollinger Band, but overlaid on that is a volume line. And that's one of the things that we specialize in is crafting unique volume lines to, frankly, get an edge on understanding what's going on with particular instruments.
Now, Bill, when you do these Bollinger Bands, and Bollinger Bands are just an offshoot of the bands that were done by Charles Keltner back in the 30s, and then John Bollinger, of course, increased all the information and the use of them, back in the early 80s. But how many standard deviations do you look at when you're watching the Bollinger Bands? Some people, you look at one standard deviation, some people take a half of one. What are you using for a Bollinger Band?
The ones that you're seeing here probably in the area of 2.5 deviations. But quite frankly, every time frame and every instrument, every chart is unique. You can't just, like you hear so often when people are trying to train new traders, you hear the phrase, it works on all time frames. That's a phrase that should raise caution flags, in your mind, because nothing works on all time frames. So, but most often I'm using something in the area of, 1.5 on up to 2.5, somewhere in that range.
Okay, now the next chart we're looking at here happens to be of the Treasury bonds, and you want to run through us what you're looking at here.
Well, we've got a narrower view. This focuses down just in the last 2 years, but a year and a half, really. And we're looking at 2 time frames. On the left is the weekly, and on the right is the daily frame. Based on volume, we're looking at, again, severely overbought markets And typically, when you see these volume lines above price, that's a pretty good sign that prices are going to go lower. It's just another overbought, oversold indicator, really. But not many people are using it the way we do, so it gives us a little bit of an edge.
Well, that's what you're looking for as an edge, and you certainly showed us that edge back on February 10th. Now, the next chart that we're going to be looking at here happens to be the Treasury notes, and we will put that up. And this one has my interest because you've really got some beautiful color graphics here that show a whole lot of stuff. But we have a first question from one of our listeners, and that is, do you use any type of volume statistics or on-balance volume in your work?
I've kind of, once in a while, I've used on-balance volume in combination with other things. But it's not a mainstay, I would say.
Mm-hmm. So, in other words, you're saying that you do take a look at it, like what I do, Bill. I mean, if it's at record volume, or low volume, that has my interest. That tells me where the players are. But anything in between, I just not been able to, do much, with understanding volume. I basically look at a bar chart and. Prices are going up, it's bullish, prices are going down, it's bearish. So that's what I'm looking at. Do you want to give us your interpretation of where we are in stocks? You showed those, your first charts were very clear. You could see that they were in the top end of some type of a resistance area. But what are you seeing right now, and what do you think will happen in the next week or so? Hate to put you on the spot, but that's why you get the big bucks.
Sure, Larry, not a problem. Well, last Friday, when I was just doing the weekend statistic summary, I just identified some market internals and later confirmed it with charts and other things that I've got that we're really extended in equities. Mm-hmm. Everybody's feeling good about it, but that's the time when you kind of want to think about the other side. And the last couple of days trading hasn't really varied much in terms of altering my opinion. Now, it's been a unique time. It kind of echoes the 200-point ramp that we had in the S&P towards the end.
Okay, Bill, we've got to pay a few bills here. Could you stay with us, and we'll be right back?
Yeah, sure.
Yeah, please. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're talking with Bill Koval of WDK Analytics in Scottsdale, Arizona. And Bill, tell us, give us a little review of what you think is going to happen here. We have a very strong astrological cycle with the lunar eclipse and then also a full moon. And I don't know if you use that stuff or not, but we're looking at a potential for a cycle high in here. So could you give us an idea of what you're looking at?
Well, I'm pretty much in agreement. I mean, if we're talking about equities, certainly the bonds, have some more down work to do long term. Short term, there probably could be a little bit of upside. But on equities, I'm kind of unambiguously bearish, certainly. And this will roll over as well. All the internals I've got some new valuation measures, new trend measures. They're all saying it's overbought. In fact, I'll give you, your listeners, a real gem here that nobody else has ever told them. Just a quick way to analyze whether a market is overbought, oversold. And if you take a look at a daily chart, for example, and calculate, the high, low, and close and the pivot every day, you'll see on the cycles, when the lows start to get above the pivot and close to the close and the highs, that's an overbought sign, and you should start to take the other side. Conversely, when the highs start to get compressed down towards the pivot, the close, and the lows, they all cluster in there. That's a low sign that whatever instrument is going through a cycle. And I still use that, every day. It's a really good guide. So, and that's saying the same thing. If you look at a chart recently, the lows are trading way up near the highs, and clearly overbought.
Are you the question that we have a situation where we do have very overbought because we've had a 250 handle move here in the S&P over since the low of February 10th. When you're overbought indicators, is that usually within a day or two? Is there a band of where you think it could turn, or is it come down to just 1 day or a three-day window? That was the question that was being asked.
Well, specifically, I think from last Friday in through now, I mean, we are topping. Typically, I don't look out long term on these indicators. I pretty much focus them on the near term because I concentrate on daily and intraday bars. monthly and weekly I look at, but I'm speaking now from the standpoint of what the daily bars are doing. So it's more or less real time.
Okay, that's a pretty important concept. Now, I've posted in here for you folks that are interested in receiving some information from Bill. You want to tell us a little bit how they can reach you and what you're offering?
Sure, Larry. On my the research website, wdkanalytics.com, your listeners can go to the newsletter tab, and they can sign up for a free subscription to the newsletter, which keeps growing, keeps getting better all the time. And we focus on the volume charts particularly. Now, also, what I'm doing is I'm going to some video content, and what I'm going to do is send them an analysis, video analysis of bonds or the S&P, whichever you think they'd be more interested in view of the fact that, maybe I'll focus on the S&P because it's at a more critical juncture, and I can describe a little bit more about, my opinion as to how I think that, we're topping out in here.
Mm-hmm. Now, you write this letter each week, is that correct?
Currently, we're doing 4 issues per week, and soon we're going to 5.
You're going to do a daily one?
Yeah.
Wow, that's a lot of work, my friend. My hat's off to you.
Well, it's one of the reasons we'll go to some video content is because it can be done a little bit easier, and it's oftentimes a little bit more insightful.
Well, the volatility of these markets is suggestive of looking at them each day, so maybe you're doing the right thing because, with these types of swings, the market is telling us that there's a lot more of this to come and probably even more, crazy than it is already, so we'll be looking at it. Well, listen, I wanted to thank you for being on with us, and anytime that you see that you have something really interesting like you did on February 10th and what you're looking at now, we're more than happy to have you on the show. You do a great job. I frankly think your work in the letter is, first class, so you should be complimented for that, and just keep up the good work.
Well, thank you, Larry, and I really appreciate talking to you, and certainly listening to your program. You're one of the best guys around, and you've got a depth of knowledge and contacts that's just unparalleled.
Well, we'll see. Well, listen, thank you for joining us, my friend, and I want to wish you and your family a happy holiday.
Very good, Larry. Yeah, thanks. Bye-bye.
You bet. That was Bill Koval of WDK Analytics out of Scottsdale, Arizona. Now we're going to have a Easter treat. You're going to see there's the old cowboy standing at the supermarket, the Welcome Supermarket on Yeedam Road in Hong Kong, one of the main streets. And Sarah and I were there this morning, and if you'll see that big rack of stuff there that looks like, I don't know what it looks like, but that's what Durin is, folks. It's an Apple, as you can see, it's an Apple. Behind that is an Apple display, but Durin is the one that is right there. Now, when I tried to get this picture taken this morning, the lady stopped Sarah and said, you can't take a picture. And I don't know why. She must have thought it was a casino or something. It was one of the clerks. Well, we still had the picture in the camera to show you, but this is the fruit that is very expensive. Each one of those is $10, which is a lot of money in Hong Kong. That's it's about 90, no, let's see, it's 75 Hong Kong dollars, which is roughly 10 US dollars. So that's a lot of money for a piece of fruit. And when you get down to it, after you cut it away, and it's, it doesn't smell bad when it's in this state, but after you open it up and the fragrance hits you, boy, oh boy, it makes a squirrel, it makes a skunk smell like Christine Dior. But anyway, neither here nor there. The folks like it. I don't. That's the end of the story. So we'll move on to the next section that we have. Now, what we've got, it smells bad but tastes good. That's what the thing is going to be. Now, we're getting really close now to the price level of 12.12 in the gold. Watch this really closely, folks. It's very, very important. Now, we talked about the euro when it got down to 11.63. The low was 11.61. We've already rallied 30 pips off the bottom, so that's another important bottom that we have looking at it. We're down quite a bit now in the NASDAQ. We're down about 35 handles so far. We're down about 10 handles in the S&P. No big deal. So we're going to pay a few bills, and we'll be right back to wrap it up. I'm giving everybody the day off on Friday.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we're going to be wrapping it up here. I still believe that I think we're closed on Good Friday. We used to be. I don't know, maybe they changed the holidays, but that's the way it used to be. Now, the global X markets will probably be open, and some of the European markets will be open. London will be closed on Monday. So that's called Easter Monday. I guess they have an Easter Monday, and then somebody else probably has an Easter Tuesday, but we'll see how all that transpires. Neither here nor there. Watch these markets closely, folks. We're at some real serious support down here in the gold, also in silver, and also in the euro. The euro's had a pretty good move off of that bottom. Right now, we're setting exactly at the 786 on the E-mini S&P down here at the 2032 level. Breaking below that tells us that possibly this lunar cycle that we're looking at is in force and a top has come in, and we should start a move to the downside. We had some real serious stuff yesterday, of course, on all the numbers, the 786 numbers, and it was, very, very important to look at. But we're making new lows now. As we end the show here, gold is trading around 1216, 1212, boys and girls. Write that down because that's a big ABCD going back about 8-9 days. That's going to be a mother, God, and country type trade, and we're down quite a bit. Early this morning we're down over $20-some, and that'll tell us that we are having a great deal of pressure, but it really makes a big difference. Now, crude oil is also broadening down to the downside, which we expected because we hit the exact 618 up there at 1.4. Well, it missed it by 18 pips in the crude oil. We were looking for 41.40. We hit 41.22, which is pretty close, and now we're trading several dollars a barrel under that, which is pretty much as expected. But we do have the holiday coming up. I will not be on the show tomorrow. I'll be out traveling. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.